Yes and no. I mean, if you're referring specifically to the China tech space, 2 points to make. First, I won't necessarily think about this as a clampdown or some kind of suppressive move. It's not the government's intention to suppress these big tech in China, like Didi and other Tencent you mentioned earlier. In fact, China, based on research, is still very much committed to grow the domestic tech sector and wanted these big companies to succeed. But I think what's happening now is really a normalization of the internet regulation in China. And to set the context, remember, Chinese internet space was largely unregulated before. And the government has only been adding regulation in the last maybe 5 years. So in 2017, we had the first cybersecurity law in China, and that's just 4 years ago. And since then, we have at least 2 rounds of consultation on data security, legal consultation on data security. And the one we happened this year, it was specifically on vehicle data security, which applies to Didi. So the context is really that we're moving from almost no regulation in internet to more regulation. Of course, during this transition, the pressure may seem high because the low base and the low expectation for regulation, but I think corporates and investors will eventually get used to it.
And you think there's no angle over here which indicates that China may want its companies to get listed on its shores rather than going to the US? One reason why the Hong Kong exchange was higher yesterday, up 5%.
Yeah, well, yes, I hear market talk about this, but it kind of going back to the U.S.-China relationship, specifically on the U.S.-China investment relations. And just want to make a quick note here that I don't think that it's what you describe is happening here. Of course, the U.S. may take a different view, but from China's standpoint, we continue to view 2 things. One is the Chinese economy and the U.S. economy are actually complementary to each other. There's no inherent conflict. There might be artificial or political conflict between the two, but there's no inherent conflict, fundamental conflict between the Chinese economy and the U.S. economy. Just think about the structure of the economy of these 2 countries. And the second point is that in terms of markets, stock markets, yes, the Chinese stock market and the U.S. stock market can also be complementary to each other. And like I said, the Didi event is not geared towards restricting or denying access to U.S. capital markets for Chinese companies. China still views it could be a win-win situation. In fact, you look at the news flow in the last 3 years, China continued to opening up its financial markets.